this is Editor's Take. I am Sakshi Batra and I have with me Gaurav Chaudhary, Deputy Executive Editor of Money Control, and today we are going to be talking about the marathon meeting that has happened between the RBI and the government and got over last evening. Thanks very much, Gaurav, for joining in. Now, this was a big one. There was markets were eyeing for sure. The big outcome have actually come out. First up, just share with us what were the key decisions taken in this meeting.
Yeah, indeed, and it was a marathon meeting, and time was when RBI board meetings were tucked somewhere in the inside pages of a newspaper, not any longer. And this time it's made it to the front pages for several days in the lead up to the meeting as well as right after the meeting. And as expected, the storm or the simmering tension between the government and the RBI seems to have blown over without any significant consequences, which is good both for the markets as well as the broader economy, and also it keeps the policy landscape consistent so far as the banking regulator is concerned. What the important decisions also include that the RBI has decided, and the government and the board has actually decided that a committee of experts will be set up, which will be jointly composed by the government and the RBI to look into the issue of or review the capital framework of the Reserve Bank of India so far as surplus transfer is concerned. That is one big decision, because it's one of the main bones of contention between the differences bone of contention of differences between the government and the RBI. That seems to have been sorted out for now. Also, the RBI has decided that its financial supervisory board will look into the government's proposal for easing of norms of the prompt and corrective action for certain public sector banks, which will probably enable them to lend more. The capital adequacy norms, the rules have been eased while it remains at 9%, but the deadline has been extended till March 2020, so that will probably give banks more funds to lend. And importantly, micro, small and medium enterprises, the RBI has decided to restructure loans to the extent of ₹25 crore. That is something that the government had also been demanding.
Absolutely. So far we can say that, more or less they have actually found a middle ground to whatever the discussions were happening. But how do you analyze these decisions taken as far as economy or liquidity of these financial systems?
One big decision which probably the board did not take or did not come out after the board meeting was the decision on easing of liquidity for NBFCs. I expect something to be announced or taken, some measures to be taken in the next board meeting, which is likely to take place on December 14th. NBFC liquidity is a problem, and it has become more acute after the IL&FS crisis has come about. We cannot allow NBFCs to be without funds, because NBFCs is an important cog in the financial services ecosystem. And so it's absolutely important to keep them well hydrated. Probably the RBI and the board had thought that they're, as of now, seemingly well hydrated, and there's no need to pump in extra funds. However, whatever the differences between the government and the RBI are, I think from an eyeball to eyeball confrontation, it has now become a bit of a they have arrived in some kind of a truce. Whether it's easy or uneasy, only time will tell. But as of now, the storm seems to have blown over.
But for sure, that would you say that the meeting was somewhat inconclusive? It was a 9-hour long meeting. There were lots of issues to be ironed out.
Yes. So what is important to note here is that RBI board meetings do not generally last so long. And going by the statement that was issued late in the evening after the board meeting, and there were only about 4 decisions that were announced in the statement. If these 4 decisions were to be taken, what remains unanswered is that why did it take 9 hours for the board to actually arrive at this decision? So we would not know unless the minutes are put out in public and we can actually analyze which members said what. But till such time, if only these 4 decisions were to be taken, it remains a little inexplicable why it took 9 hours to take this decision.
Absolutely. And one key concern which all the analysts and economists had was that the RBI's autonomy or independence should remain intact. Was there any decision taken that can actually have an impact on that?
So so far as the discussions around Section 7 is concerned, we would not know until the minutes are put out whether any discussion on invocation of Section 7 was discussed. But one big difference between the government and the RBI in the lead-up, as was reported in the media, was whether the government should be seeking extra funds from the RBI surplus. That seems to have been taken care of, at least for now, because they have decided to form a committee jointly by the Finance Ministry and the RBI, and that difference is one of the key thorny issues seems to have settled. But I don't expect this to take place. The decisions on on a new capital framework to take place immediately. First, the committee has to be formed. We do not know the composition of the committee yet.
Yes.
And after that, it has to be, the committee has to submit a report. After that, it might require some legislative changes. So by that time, I think we'll have a new government in place. I don't expect anything so far as the new capital framework is concerned to take place at least before July next year.
Right. And what was the key takeaway for the markets? Do you think that the government has had its way in this meeting?
I think it's, if to borrow a tennis analogy, it is kind of deuce.
Okay.
And the government is going to serve now. It's even Stevens, but nobody has taken, nobody has exceeded too much, and nobody has gotten too much. I think it's good for the markets.
Absolutely. Thanks very much, Gaurav, for sharing these details and insights with us. Well, the big meeting is over. All eyes on now the second board meeting, which will happen on December 14. Some of the issues which could not have been taken up in this one will be taken up next time around. But for now, it's okay for the markets because there was a middle ground, a truce and a deuce. But nobody actually came out as a potential winner out of the RBI and the government is what we can say. So far, the big breather for the markets is that definitely there were no resignations or exits that happened from the RBI. And now we'll just have to see what happens in December 14 meeting. Thanks very much for joining us in this edition of Editor's Take, and do stay logged on to moneycontrol.com for more news and updates. Thanks for watching.